Hey guys, speaking of Tesla, it seems that most people here are focused on the fact that Elon Musk's tweet caused Tesla's share to drop 10% on Friday. He tweeted something like Tesla shares were too high and hence created this mass reaction. But to me, given Elon's personality, I'm kind of used to these random tweets already. I'm personally more interested in the reason why the Tesla share drop almost 10% after great earnings here. And the reason is because one hedge fund manager out there named David Einhorn tweeted casting doubts on Tesla's financial statements, and as a result, a lot of people are afraid of his tweet and hence caused a drop of the stock. So in today's video, I'm going to go over the two areas that Einhorn casted doubts on, and I'm going to try to analyze if his doubts are valid. And here's his letter here. I remain curious about your accounts receivable. Tesla's claim for why there are so many for a product where the customers pay upfront was that sales are crazily concentrated in the last days of the month, so much that it matters if the month ends on a weekend. This quarter ended on a Tuesday, and by all accounts, sales were not back end loaded as most of your market was shut down at the end of March. Yet, days sales outstanding rose from 18 days to 21 days. Can you or Zach explain? So, this part of the tweet questions the accounts receivable of Tesla, and the reason why Einhorn brought up the fact that this quarter ended on a Tuesday is because he actually questioned the accounts receivable of Tesla back in 2018 once already. And back then, Tesla's CFO responded by saying that the last day of the quarter fell on a weekend, and hence a lot of customers' payments are not yet cleared by the bank, and hence causing a bump in the accounts receivable. So let's look at Tesla's accounts receivable for this quarter. Um, as you can see here, this line is the accounts receivable, and I've also copied the revenue to this page just for your reference. And looking at the numbers, the accounts receivable actually did not look unusually high compared to the last four quarters. Yes, this quarter did not end on a weekend, and hence there shouldn't be any uncleared payments pumping up the accounts receivable. That being said, there are other reasons why accounts receivable would increase. And so let's go back to the basics and look at the major component of Tesla's accounts receivable. As you can see in their 2019 annual report, I have highlighted their major components for accounts receivable, and they're respectively leasing sales from leasing of their cars, sales of energy generation and related products, sales of regulatory credits to other automatic manufacturers, and maintenance services provided to vehicles owned by leasing companies. So because these are the four major components of their accounts receivable, we can comprehend that the increase of these four streams of sales and revenue would increase Tesla's accounts receivable. So the question now becomes, did these four streams of revenue increase during the previous quarter, which is the Q1 of 2020? Let's try to find out. So here is the Q1 earnings report, and automotive regulatory credits increased quite a lot from 216 million to 354 million. That's a jump of about 60 something percent. And automotive leasing also increased by about 10%. And energy related sales stayed flat or perhaps maybe dropped a bit. But overall speaking, it looks like that Tesla managed to increase these four components, revenue from these four components from 755 million to 886 million, which is an increase of about 17%. So given that, I actually think that the small increase in accounts receivable is plausible. Now, some observant investors might notice that the total of these four components here is only 886 million. Why is the accounts receivable for Tesla in this quarter 1.2 billion? And that will be a good question. And the reason why is that these income figures here are for this quarter only. And so hence there's quite an amount of accounts receivable that corresponds to the sales of previous years. And that is especially true for the leases because leases usually last anywhere between 3 to 5 years. So I actually think that the accounts receivable for Tesla is plausible given my analysis here. So I want to turn back to the other area of the financials that Einhorn doesn't buy. Let's continue on his letter. I have another question. This quarter, your production was lower and split over two factories, affecting cost absorption, particularly in Fremont. Your average selling price was lower. Your mix had fewer high-end margin models S and X. You ramped up Model Y. Both factories were interrupted, driving up costs. And though you didn't discuss it, currency should have hit your margin by 2 to 3% compared to last quarter. All of these factors appear to be headwinds to your auto gross margin, which actually barely budged. Can you or Zach explain? And so here, Einhorn is questioning the gross margin, and he is wondering why did the gross margin increase given a bunch of tail headwinds that he pointed out here. Let's try to break them down one by one to see if they make sense. The first thing he pointed out was that the production of Tesla lowered this quarter, and hence that would affect cost absorption. So I think he kind of has a valid point here because, in theory, if there are fewer units produced, there would be fewer units to absorb the direct overhead cost, which is usually a fixed number, and hence driving up the per car cost and affecting gross margins. But looking at the actual production numbers here, the production number of Q1 2020 is only a little bit lower than that of Q4 2019, lower by about 2%. And in fact, it is actually significantly higher than all of the first three quarters in 2019. Hence, I actually don't think this is much of a big factor here. And let's look at his next point. He's saying that average selling price was lower and there are fewer high margin models S and X. I think this point is actually very valid, so I'll give this point to Einhorn and see if Tesla is going to help me out here. And here's the third cost. Einhorn stated that factories were interrupted and hence driving up costs. So I think the costs will be driven up a bit too, but we really need to know the accounting behind the COVID-19 related costs. For example, did the interruption costs go to the cars or did they go to the operational costs? Because if the interruption costs goes to the cars, then yes, gross margins would be hit. But if those costs actually went to operational costs instead, then the only thing being hit would be net income and not gross margin. So here, I'd actually like to show you another income statement for another company that I think Tesla will become in the future. And so this company relies on a lot of factories and hardware sales as well. And yet they managed to have an increased gross margin in their first quarter compared to the previous same quarter. And why doesn't Einhorn question this company? Well, maybe because the name of this company is Apple Inc. And so the last point that Einhorn brought up is that currency should have hit the margin a lot by 2 to 3% compared to last quarter as well. So first of all, I would like to see how did Einhorn come up with this 2 to 3% figure, and because to move margins that much, I assume we really need a big appreciation of USD compared to other currencies so that the margins from other countries would decrease. And looking at the graphs here, I have the graphs of USD to Euro here and the graph of USD to Chinese RMB. Looking at the graphs, I don't really see that much big of a difference comparing this quarter and previous few quarters. So I'm actually not too sure of Einhorn's opinion here. And last but not least, Einhorn's doubts on Tesla's margin failed to consider the tailwinds that would increase the gross margins of Tesla. And in my opinion, it is pretty common for a growth company to experience improved margins. So I actually think a lot of his concerns are not necessary. And at the end of the day, the best person to answer Einhorn's questions is Tesla's CFO. And I really look forward to any comments of his, and hopefully, we will be able to see more information regarding the accounts receivable and the gross margin when they release their second quarter earnings. So, to sum up, Einhorn's questions on Tesla does not make me question the integrity of Tesla's financial statements, as I believe his questions could be answered in a logical fashion, as I have done above. And I'm not going to sell any of my positions here. And currently, I have 8 shares of Tesla, and I'm just going to hold for a while and see if Tesla's gonna answer his questions. Otherwise, I'm gonna wait for the next few financial statements and quarterly statements. So that being said, I think that everybody should analyze the situation for themselves and assess whether to buy or sell or hold. And if you have any questions related to this video or anything else, please feel free to leave a comment so I could try to help. And that's all for this video. Thanks for watching, and please subscribe to this channel if you would like to see more of these videos in the future. And have a great day.